Li Auto is a Chinese EV startup company, and it's the newest name really to go public on the market here in the US. It's only been public for a few days now, but it's already making headlines in the US, and investors are already flooding into this name in hopes to ride a big wave up in the stock. So what makes Li Auto specifically here such an exciting investment for some investors? Is it because it's another Chinese EV play? Is it because they have a different type of approach here to the EV market? Or is it their financials that excite investors? I'm going to answer all those questions, guys, today. I want to take a deep look into this company. I want to talk about the business, talk about their product, and also look at their financials to determine if this company does make sense here as an investment. Now, you guys have been asking me quite a bit here to make a video on a Lemonade stock, and I'm kind of torn on if I should or shouldn't. If you do want me to make that, help this video get at least 1,000 likes, and if that does happen, I will release a video on Lemonade stock. But anyways, guys, getting into it, let's discuss this company, let's discuss this business, and you know what, maybe it will end up being a pretty attractive investment. Let's find out. So here's the actual stock and ticker. The symbol is LI, and it's traded currently on the NASDAQ. It's only been public for a few days, so the volatility is still relatively high on this name. But what does the company do? Well, taken from their SEC filing, they design, develop, manufacture, and sell premium electric SUVs, but there's a unique aspect to it here. They are the first company to successfully commercialize extended range electric vehicles, or EREVs in short, in China. This EREV technology is what gives them an edge over some of their competition today, because it allows their customers to enjoy all the benefits of an electric vehicle while freeing them from range anxiety that is typically associated with battery electric vehicles. Now, if you ask the business, well, what makes your company better than the competition out there today? This is what they have to say. They have a highly competitive product and pricing to capture the fast-growing large SUV market opportunity. This is because they want to continue to price their vehicles between around 21,000 USD to 70,000 USD, catering to the broader market. They claim they have successfully commercialized proprietary EREV technology. Their smart vehicle solution delivers superior user experiences, and they have a lot of technology in their cars. They are highly efficient in sales and marketing, and I think they've done a pretty good job here considering the amount of interest this IPO has even gotten. They also have effective quality control capabilities, and I mean, I would really expect this with any company that's selling a product worth thousands of dollars, but I mean, nice that they note that here. And finally, they say that they have a combination of expertise from automotive, smart device, and internet industries to help them succeed. So I mean, looking at their benefits here and their selling points, I would say the most unique part is the extended range portion of this company. That's kind of what differentiates them from any other battery electric vehicle company out there. But this can also be seen as kind of a negative, because on the flip side, if you're looking at an EV play, this is technically not a fully electric car company. Their marketing has done an excellent job trying to convince consumers that it is a fully electric car company, but because of this other aspect here that makes them so unique, their vehicle actually has a 1.2 liter turbocharged gasoline engine in there. But that being said, it does work in a unique way. It's not going to be used to power the car directly, but what it will be used for is to kind of extend range so that this vehicle can have some phenomenal range and people don't have to really worry about range anxiety, as they say. So the bottom line really is that this vehicle generates electricity from battery packs and internal combustion engines, and this is really their differentiating factor. So really, guys, you have to be aware of this and look at this from an investment perspective. And if you're looking for a pure electric company, you know, electric from A to Z, then you're definitely not going to be looking at a company like this, because that's not what they do. You'd have to be looking at a company like Tesla, for example. But if you do believe that the future of this industry is kind of a hybrid approach where majority is electric, but then there is still some gas-powered components and features and functionality to the vehicle, then this may be a very interesting play. Okay, so now let's discuss the vehicle itself to figure out what's going on here, what does it look like, and is this actually worth all the hype? So the vehicle is actually called the Li Xiong 1, meaning the leading ideal one in English, or the Li One for short. It's a 6-seater, large premium electric SUV equipped with a range extension system and cutting-edge smart vehicle solutions. It has a bunch of technology like voice interaction, 4-screen interaction, and some car controls like lane keep assist and adaptive cruise control, which are more or less standard now in most cases. From a technical perspective, you have some facts here that they present. Range is up to 800 kilometers, 0 to 60 time is 6.5 seconds, and it's an SUV that has 4-wheel drive. Now you may be thinking that 0 to 60 time is pretty mediocre here, especially when compared to other pure EV companies, and this is one of the disadvantages that I personally see of having it not fully electric, because there are other components and weight now that's going to be added to the vehicle, which does impact performance. The company stated that volume production of the Li One started in November 2019, and since then they've delivered over 10,400 Li Ones as of June 30th, 2020. 6,604 of these orders came in the last 3 months, so there does seem to be some traction and demand for their product just a few months after launching here. So that's kind of the company from a high level, and just kind of a quick overview of the product that they sell. So you can see, based on the numbers and based on the facts that we're given, that it's a pretty compelling story that they have here, and there seems to be some demand around this product right now. And you must be thinking, well, cool, this sounds like a pretty good thing. I want to buy some Li Auto stock here today. But if you do, just keep this in mind. The ownership structure of this company and this business is really complicated in my opinion, and this is a big reason I don't generally like investing in foreign or kind of these small startup type companies. Look at the diagram here and you'll see that Li Auto is actually a Cayman Islands holding company, and you can follow through this flowchart to see where the ownership for this business actually lies, and to me this is unnecessarily complicated. But if you do want to invest in Chinese companies like Li Auto, this is something you should look into as well, and this is not uncommon to see with other Chinese names as well, and it's a big reason why I don't feel comfortable putting my money into a business like this. Okay, so now comes the fun part. We have to look at the financials of the business, because really guys, when we're looking for an investment, this is one of the most important aspects. The financials need to look good, the balance sheet needs to look good, and if it doesn't meet that criteria, there's no way that I would invest in any business. So here's the income statement for them for the last 3 months ending March 2020, and we can see how things shake out. Revenues were 120 million, but the cost to generate that revenue was over 110 million. This resulted in gross profits of 9.6 million, but after all their expenses of the business and all this other stuff were taken out, their net loss was $10.8 million for the quarter. So looking at this, we know a couple of things. The first, the company spends a lot of money here to acquire customers and sales, and also that the company is currently not profitable, losing around $10 million in this quarter. Also note that in 2019, the company did lose around $343 million in the year, so this $10 million loss here is a huge improvement, and maybe this signals that the business's worst days are behind them, and from here on out, it's a path to get closer and closer to sustained profitability. Now here's a look at their balance sheet, and we'll look at the last column here because it reflects the termination of warrants issued during their Series B3 and Series C financing and automatic conversion of all issued and outstanding preferred shares into Class A ordinary shares on a 1-for-1 basis. Using this, the company has $148 million in cash with total assets of $1.32 billion. Total liabilities for the business sits at around $474 million or so, so this can easily be covered by the assets, and they have almost 3 times more assets than liabilities on the balance sheet. So from a financial perspective, this company is surprisingly fairly healthy here. And even if they continue losing $10 million a quarter or something like that, which, I mean, I think that'll probably rise as they continue scaling, but even if it's around that range, they have a good enough cash buffer and enough assets to really cover this risk. Now the latest news on Li Auto is of course their IPO, and this was a big success for the business as they were able to raise $1.1 billion more capital to fund their new production facilities and to further develop their research. So I was very surprised to see the financial statements here for the company. The revenues are growing, the losses are diminishing, and the cash balance and assets that they have are pretty healthy. So overall, things are looking pretty good. But anyways, now we really need to look at the valuation here to see if what the company is trading at today and what they went public at actually does make sense from an investment perspective. We understand the business, we understand the product, we understand the balance sheet, we understand the income statement, we understand all these metrics, but the valuation is important. The company went public with 95 million shares at a cost of $11.50 a share, and this put their valuation at $1.092 billion. However, today we're sitting at over $16 per share, so the value is now over $1.5 billion as optimism and hype drove prices higher. Is this justified? Well, it's a tough call really to judge this company so early because they've really been selling their product for less than a year now, and if demand like this continues rising exponentially, this could be a company, in my opinion, that could be a $3 to $5 billion market cap fairly quickly. But if demand dries up, which is again a realistic possibility, you have to consider both sides of the coin here, this could remain around a $1 to $2 billion company for an extended period of time, or possibly even drop lower in valuation if competition starts eating up their market. So guys, I would say that I'm pretty torn on this company from an investment perspective. A lot of the metrics that we look at look pretty good. However, there's one key thing that keeps me away here, and it's the fact that it's a hybrid car. I believe that the future is going to be a fully electric vehicle. I believe that having components for gasoline and all that kind of stuff still keeps the liabilities for owning a product like that in your car, and you have to deal with maintenance and it's not clean and all these other kind of things, right? So I think that companies like Tesla that have fully electric from A to Z are the future, which is why I will not be investing in Li Auto. But that being said, if you are someone that believes that the future of vehicles is more of a hybrid approach, where majority of it is electric, but there's still other components in there that are not electric but assist the electric part, then maybe this is a interesting play here. But either way, it's a high risk company, so I wouldn't be putting a massive portion of my portfolio into this stock. It's a spec stock, if you will. It's a high risk, high reward stock, if you will. But if things don't go according to plan, you have to be ready to lose this entire investment. Not saying that's going to happen, but it is something you need to have a mindset about if you are investing in businesses like this. Guys, either way, I hope you enjoyed this video. Let me know in the comment section down below if you want me to cover Lemonade stock. As I said before, 1,000 likes and we'll make that happen. Thank you so much for watching. Don't forget to invest positively. I'll see you in the next one. Peace.